YouTubers, thanks for joining me again. Mike Martin's channel. Mike Martin's here, bringing another hard-hitting story here with the Vancouver housing market. It's out of control. It's out of control. It's out of control, and banks are starting to weigh in with concerns. And here goes. I'm going to read this, and this article is just burning to be read. It's a burning article, and it's on fire. Here goes. Scotiabank CEO concerned about correction in Vancouver and Toronto housing market. Toronto. The CEO of Scotiabank says he's concerned about the possibility of housing market correction in Toronto and Vancouver. Brian Porter, who was asked about his outlook for the Canadian mortgage market during the conference call to discuss the bank's first quarter results, said he's supportive of recent government changes introduced to reel in price growth. Trees don't grow to the sky, and markets will correct at some stage here, Porter told analysts on Tuesday after bank reported net income of $1.49 billion during the first quarter of the year. Ottawa introduced a series of changes to mortgage rules last October, including one that requires all insured mortgages to undergo a stress test to make sure that borrowers would still be able to repay their loans if interest rates rise on their circumstances change. So, remember what I told you about the stress tests and variable rate mortgages? Very important. I told you guys variable rate mortgages could change it in a heartbeat. And you could look at a $1,200 payment to $2,600 payment, or $1,500 depending on how high the rates go. And it gets very scary with how much interest and fees you pay the bank if the rates do go up. Previously, stress tests were not necessary for fixed rate mortgages longer than 5 years. Exactly. But they were forecasting that rates would stay the same or go even lower or even go into negative interest rates. I don't know if you remember 3 years ago, I was doing a story about negative interest rates in some banks in Europe. I think we're going to need some time to see those take hold, and we will see that through the spring mortgage season, Porter said. Porter highlighted the bank's very conservative mortgage book, saying that more than half of its portfolio of mortgages loans is insured. That's important. So really the message is we're governing ourselves accordingly, he added. Scotiabank Chief Financial Officer Sean McGuckin said that if prices continue to grow, more government intervention may be useful. And then he goes on to say, I wish I had a crystal ball, I just don't have one in terms of where prices go, McGuckin said in an interview. So this is really important. Scotiabank's starting to weigh in. You got all the banks in Australia starting to weigh in and looking at what's going on, because the last thing they want is people just to lose their homes, and nobody wants to lose their home. No one wants to pay a mortgage for 10 years and then realize, oops, we can't afford our mortgage anymore. We lost 10 years worth of payments and we lost the house. You don't want that. And then you don't want the house being worth less than what you bought it for. So if you bought it in the last 2 years and you're noticing you're going underwater and you took all the equity out of your house, it's not easy, you know. You gotta prepare. And I keep telling people, you gotta prepare for the next 2-3 generations, and a lot of people aren't doing that anymore. Brian Porter, President and CEO of Scotiabank, waits to address the company's annual meeting in Calgary, Tuesday, April 12, 2016. Porter says he's concerned about the possibility of housing market correction in Toronto and Vancouver. So this is an older article. It was sent to me. It's actually from February 28, 2017, but it's been updated. So this is a really good one because it's almost like a prediction, not a post-diction. It's a prediction. So they're weighing in. I think the underwriters, what's happening is underwriters, when they're approving these deals, a lot of underwriters know, especially the high-end, like the higher level underwriters that can approve deals, shady deals, they look at some of these deals and say, I don't know how we're approving these, but the bank's giving the green light on some of them, because it happens a lot. It happens where underwriters, I've seen it, where underwriters look at a deal, it's like, this thing's going to fall apart in 6 months. But sometimes they have to give the go-ahead on it, you know what I'm saying? Just so banks hit their quotas, right? So Scotiabank looks like they have the shoes on tied right, and it looks like they have the proper measures in place to make sure that if things do hit the fan, they're prepared. Anyways, guys, let me know, weigh in on what you think. Scotiabank CEO concerned. There's going to be a correction in Vancouver, and this is a new article. I'll leave a link below from February 20, 2017 at 1:34 p.m. that was sent to me. Thanks for sending, thanks for sharing, and don't forget the subscribe button.